The market here mirrored global sentiment as it ended with small cuts. FMCG index is the lone winner, while most other sectoral indices were in the red. The volatility index gains over 5%. IT banking stocks were under pressure in a generally weakish market.
The Reserve Bank of India cuts the repo rate by 25 basis points as expected, changes the policy stance from neutral to accommodative. The governor raises the red flag on tariffs, says he worries more about the impact on growth rather than inflation, refuses to predict where rates are headed amidst tariff wars.
Chinese premier hits out at US President Donald Trump and his trade policy, saying China is equipped to fully offset any external shocks, believes China's growth remains intact. This while Trump took pot shots at world leaders who've been calling him to strike a deal. Meanwhile, the Chinese yuan hit a new low as the People's Bank of China eased its grip as tariffs take effect. You're with us here on Markets Forward, your go-to program where we aim to get you everything you need to know as you come back, not tomorrow, but the day after, tomorrow being a market holiday. I'm Prashant. With me, Surabhi. Surabhi, hi.
Hi, Prashant. So a day that started off with some amount of volatility. Then once we got through the policy, it was then after that it was fairly flat. But of course, the color was red.
Actually, the policy turned out to be a non-event, right?
Yeah.
It was largely in line with expectations, except, of course, that gold finance bit, which came out as a surprise. But otherwise, I mean, they've cut 25, they've changed their stance, so the market really moved on. But we've seen, global markets have seen a decent bounce from the lows, and I think, if it's incremental change is what markets are all about, and you just want to watch which way the thrust is, up or down, then today at least it was from the lows to the way up. And I think that perhaps is the best way to describe it. We ended with 0.5% cuts, except the small cap index, which ended with a little bit more. There's no real sort of clarity on tariffs. Even as tariffs have gone into effect, markets are still waiting and watching for clues in terms of what this will really, what the end game really is, or if there is an end game. And I think that is where we find ourselves at. Tomorrow, of course, is a market holiday. Which of course provides all of us with some rest, but it also complicates things because you'll have 2 sessions worth of headlines to react to when you come back on Friday morning. Surabhi.
It's a complication we can deal with. I don't think anyone will complain. But yes, I mean, there is that outlier risk of, you never know what. For the day today, the Nifty, the final tally was the Nifty was down about 0.6%. And as that chart says, that once we got through the policy announcements, 10:30 onwards, the market was just absolutely flat, didn't do too much. The financial side of the market, interestingly, actually sold off. A lot of the large banks, NBFCs, they were all on the downside, perhaps because the policy didn't have anything out of the box. It was absolutely on expected lines, and therefore the rate cut as well as the change in stance perhaps already priced in. The advanced decline ratio, let's just pull up the crisscross lines because that's where there was a slight negativity. There were more stocks declining than advancing, almost a 2:1 kind of a ratio, with 2 stocks declining for everyone that was advancing. Now, in terms of the sectoral spread out, big slam dunk on IT once again today. Metals very weak. So once again, global facing sectors were bearing the brunt of it. And there was a rush to safety. Finally, consumer stocks, and that too consumer staples, they found a lot of takers. So stocks like Nestle, etc., they were doing pretty okay. That's the Nifty consumption, which was up almost 0.5%. So that in a nutshell kind of explains what transpired. Of course, we are going to get you more details over the next 20 minutes. Let's tell you what the lineup is like. We'll, of course, focus on some individual stocks as well, along with sectors that were that were in the limelight. The movers and shakers of the day will come up with Vivek. After that, we'll talk about the RBI rate cut. 25 basis points is done. We'll have, of course, our in-house experts to give us a detailed view on what this means for policy going forward. The RBI Governor is also expected to issue guidelines on gold loans, and that weighed very heavily on stocks. We'll talk about that. IT stocks were in focus following a slightly negative report from Jefferies. They've downgraded a whole bunch of IT names. So we'll get you more details on that as well. But first up, let's go across to Vivek to understand the stock-specific action of the day. Vivek.
Well, thank you so much for that. Especially post the policy, it was a very dull trading session given the fact that there weren't too many wild moves that we've been used to seeing in the last few trading sessions. But quite a few gainers also in today's trading session. First on the list has to be the entire FMCG pack. Very good commentary coming in terms of easing inflation, so raw material prices easing as far as the FMCG pack is concerned. Also strong commentary coming in as far as monsoon is concerned. Back of that, the entire FMCG space, HUL Britannia, amongst the top gainers as far as the Nifty is concerned. The next stock on the radar is Hudco. This particular stock, the company actually received a news development indicating that they will now be allowed to issue capital gains bonds under Section 54 EC. That particular stock, this is a significant development, a lower cost of funds, and on the back of that, over 2.5% higher for Hudco. Mastech, the top gainer as far as NSE 500 is concerned. Very strong volumes, cooled off a little bit towards the day's lowest point, towards the day's end, but that particular stock, very strong volumes today. And on the list of gainers, HPCL. Yesterday was a strong outperformer. Today continued the move higher. Lower crude oil prices actually aiding sentiment as far as OMCs are concerned. But on the other hand, quite a few laggards as well. The entire IT pack. You saw the downgrade coming in from Jefferies. Also remember TCS results tomorrow. Ahead of that, the entire pack sold off quite significantly. Wipro over 4% lower. The pharma pack, renewed worries about impending tariffs. And on the back of that, you did see significant selling pressure. And of course, Muthoot Finance, still we don't have clarity in terms of what exactly are going to be the guidelines as far as gold loan is concerned. That particular stock ended lower by 7%. The pharma fact, like we just mentioned, the entire pharma index was under significant pressure today. And lastly, Phoenix Mills came out with their operational update, and it was very clear that the LFL growth or the like-for-like growth has moderated quite significantly. That particular stock amongst the top laggards in the F&O space.
All right, Vivek, thank you very much for that. So it's a comprehensive wrap out of what was up and down and what moved. Shrikant Chouhan is with us on the technicals, price action. Ambareesh Baliga is with us as well on the fundamentals, and we talk stocks. But just a quick near-term view, Shrikant, both Nifty and Bank Nifty.
Good afternoon, Prashant and Surbi. For Nifty, it is extremely tricky to understand that what exactly happening in the market, because since last 2 days, if we see the technical pattern of the market, then it is in the range, and it's a clearly indecisive pattern. But the way we saw a sell-off on Monday, and later on the way there was recovery and gap up opening, I am of the view that till the markets are not breaking the levels of 22,200 on a closing basis, we could see range-bound sort of activity between the broader range of 22,200 and 22,800. But in case if we see the market is dropping below the levels of 22,200, then in that case, the chances of hitting 21,700, 750 would turn bright. And if we consider the today's low with the low that we saw in the month of June 2024 after the election, the low was around 21,200. So we are just 1,000 points away from that low. Nifty IT index has already reached to those levels. And as we are discussing about Nifty FMCG, consumer staples, if they are doing well, that means the market is taking more and more defensive approach in the market. So we should be on the risk off side. And broadly, I'm of the view that we need to focus on the important level of 22,200.
Okay, 22,200 needs to be a critical watch point. Got that, Shrikant. Let's then get to our top story of the day. The Reserve Bank of India's Monetary Policy Committee has taken a dovish stance to counter the uncertainties linked to US President Donald Trump's sweeping tariffs. As expected, the MPC has decided to cut the key repo rate by 25 basis points to 6% for the second time in a row. The MPC also made a unanimous decision to change the stance from neutral to accommodative, signaling room for perhaps either a pause or more rate cuts in the coming months as well. The MPC also revised the growth forecast slightly lower for FY26 to 6.5% from their earlier estimate of 6.7%. The forecast for the first quarter has also been trimmed by 20 basis points. Let's listen in to the RBI Governor.
The dent on global growth due to trade frictions will also impede domestic growth. Higher tariffs shall have a negative impact on net exports. You are all aware that India is very vigorously and proactively engaging with the US administration on the foreign trade agreement.
All right, well, that is the governor. Let's now hear it from Latha, who's joining in with the editor's take on what she made of the policy. Latha, dovish enough or just dovish?
My take would be it was more dovish than expected, and it has promises for more dovishness to come. So that's why I think it was an elated market, an elated ecosystem. Why do I say more dovish than expected? 25 basis was always expected, but we didn't get a majority vote when we polled people for the change in stance. So that's clearly more than what the market expected. Again, the growth cut was not quite the unanimous view in the market. The fact that it is cut is an indication that they're seeing challenges to growth. That's always a sign that, you may have to help growth with few more cuts. The CPI cut was clearly a surprise. Most people thought that they would, hold on to their horses. It's also the statement that accompanied. The governor's or the MPC statement is, as per projections, there is now a greater confidence of a durable alignment of headline inflation with the target. Up until December, a dozen policies the MPC has told us that our goal is to use policy to align inflation durably to the target of 4. This durable alignment was a goal. And lo and behold, now the governor is saying it is durably aligned to 4%. So that, again, was something the market was very elated about. It confirms the dovishness. And finally, in answer to a CNBC TV 18 question on the neutral rate, let me tell you that everybody was working towards 5.5 as the terminal repo rate in this cycle. We started at 6.5, we are now at 6, and it is expected it will go up to 5.5. How do you arrive at that figure? You achieve 4% inflation. 1.5% is seen as the real rate, which the economy needs. So 4 plus 1.5, 5.5 was what everyone was working with. The governor gave two signs. One, that when he is giving the forecast of inflation for all the months of 2025, inflation is going to be below 4%, between 3.6 and 3.8. And secondly, when we asked him about the real rate, he said RBI studies show it is between 1.1 and 1.9. There was something about his answer which made people feel that it would be okay if the real rate were even towards that 1.1% mark. Put the two together, the market is now almost a majority expecting that the risk is of the repo rate going below 5.5, probably to 5.25. There are many reports that you will hear from brokerages on that score. So that, again, for me, is a sign of more than expected dovishness to come. And finally, his answer on liquidity. When I tried to lull him into give an assurance on liquidity, he's almost promised that they will keep liquidity surplus at around 1% of the total deposits, what you call NDTL, net time and demand deposits. That, again, was for the market an assurance. After all, transmission of rate cuts require that there should be adequate liquidity. And this kind of a almost clear promise that we will keep, 1% of total demand deposits comes to about 2 trillion rupees. If that kind of, durable surplus is kept in the system, the market would feel reassured. So that's why I would think that it was more dovish than expected. It promises more dovish than expected.
All right, Latha, thank you very much for that. And perhaps more coming, right, as you said right at the beginning. Well, let's talk about the other story, right, from the RBI. But of course, this was the unexpected bit. Gold loans, perhaps under a bit of scanner. Muthoot sold off 10%, then recovered a little bit, then sold off again, ending about 7% down. That's the largest pure gold loan company in the country. Ritu is here with exactly what the regulator said. Or it's trying to do here. Ritu, over to you.
Well, while we await the draft rules from the Reserve Bank of India on gold loans and on co-lending arrangements, here's what we know so far. Now, on gold loans, RBI said it is going to issue comprehensive guidelines on prudential norms and conduct-related regulations for all regulated entities. The idea, it said very much, is to harmonize these lending rules and to rationalize them and not really tighten gold lending rules. Now, what are the issues that RBI has observed so far? If you look at its previous comments, it spoke about shortcomings in the use of third parties for sourcing of loans, valuation of gold being done without the presence of the customer, weakness in monitoring monitoring the loan to value ratio, incorrect application of risk weights and so on. Also keep in mind, gold loan is the fastest growing segment among all kind of loans for banks, growing at nearly 87% year on year. When it comes to co-lending arrangements, the scope has been broadened to include all regulated entities and all segments and not just priority sector loans, which was so far the focus. There was a regulatory grey area when it came to NBFC to NBFC or bank to bank co-lending. So all of that will now be corrected in the new guidelines that come into play.
Okay, got that, Ritu. Thanks very much. That did lead to, of course, pretty sharp cuts, especially when this announcement was immediately made on a lot of the gold financing NBFCs. We've got Ambareesh also with us. Ambareesh, by the end of it, there was some recovery in names like Manappuram. Muthoot was still down. What do you make of these, possible, changes in regulation, and what would your advice be on Manappuram and Muthoot?
No, see, I mean, whenever there is an additional regulation which comes in, it can disrupt the business for some time until you really get used to the new normal. So looking at the way the gold loan companies have expanded in the last 4 years, I think the disruption can be a bit widespread. So for the time being, I'll just wait and watch, let the regulations come, and then possibly we can take a call.
And I think we don't have to wait very long, right? I think we'll know by the time we hit Friday morning, we come back, we'll know. Otherwise, NBFCs, Ambareesh, any thoughts from anything you like in that space, really?
NBFC is nothing as such, but then I would still be positive on the banks, both PSU as well as the large private sector banks. So that's where we have started reinvesting again. But NBFCs, for the time being, we are staying away.
Okay, let's talk about IT now. Rima is here with us. Our TCS reports tomorrow. We know the backdrop is pretty uncertain, and that'll be the top question which we'll put to them. But Rima, take us through what you're picking up.
IT continues to bear the brunt of all the macro uncertainty, rising demand concerns, a hit on the top line, margin compression, sectors like retail, manufacturing, logistics. All these could come under pressure in FY26, and brokerages are now coming to terms with the reality. Today, Jefferies has lowered the target price on Indian IT companies by 5 to 35%. So in the frontline pack, the biggest cut in target price is Wipro, where it's slashed by 32% to 210, and the other one is TCS, where the target price is down by 27%. In the mid-cap space, again, the cuts are, across the board, but LTIMindtree has seen the target price come down by 37%, for Emphasis by 29%, and about a 25% Coforge and Sagility. Jefferies prefer stocks like an Infosys, Coforge, and Sagility, where you have higher growth visibility and limited derating risk. They've downgraded a TCS, LTIMindtree, and Emphasis on account of weaker growth outlook or higher exposure to US discretionary exposure. They've also downgraded Wipro, and Wipro, in fact, was the top Nifty loser. As I said, the target price was slashed by 32% to 210, and even after the correction today, the target price implies about a 10-11% downside for the company. Now, Jefferies' revenue and margin estimates will come up for you on your screen. FY26, according to them, Wipro will see negative growth, minus 0.5%. FY27, a modest 1.7% growth. Margin estimates too have been brought down, and they anticipate a very meager 2.5% EPS growth over the next 3 years.
All right, Rima, thanks very much for that. Ambareesh, any picks here in the IT space? What's the risk here? Is the risk more downside, or the margin, the risk is on the upside after tomorrow when we hear from TCS?
No, I think the risk is on the upside, because the way these stocks have corrected, we should also remember that they have underperformed during that whole run which we saw in the last couple of years. And in the last couple of months, we have seen a decent amount of underperformance. Something like a TCS has lost more than 30-35% from the highs, recent highs which we have seen. The issue is not direct. It has got nothing to do with tariffs directly on the IT space. So there's no tariff on that. The fear is of a slowdown in the US. So that's a question mark. Slowdown, yes or no? And in case of a slowdown, will discretionary spends, go away? No, it can't, because they need to have the systems up and running. The question is on the non-discretionary spends. Will it become zero? Again, the answer is no. It can reduce to a certain extent. So as against that background, if you have the stocks correcting so much and the negativity is so high, I think it's a good time to start cherry picking, especially the leaders in this space. Maybe you may have to hold on for the next 12 to 15 months, may not get an immediate upside. But then from these levels, the downside seems quite limited. And I think by tomorrow evening, we should have the management commentary from TCS, and that will also possibly throw more light on what are the risks they're expecting.
Shrikant, any strong trades here, stock-wise?
No, stock-wise, like I said, I would prefer to go with the leaders at this point of time. That's not only for this sector; it's across sectors.
Right.
Because when things are going wrong, especially when the market men feel that things are going wrong, you should go in for the leaders in that space. And here, I would surely go in with something like a TCS, Infosys, as well as HCL Tech.
All right, 10 seconds, Shrikant. Any trades?
Yeah, I think Prashant, these FMCG stocks, they are doing well, and in that space, Tata Consumer looks good to create some long positions.
Tata Consumer. Okay. All right. Gentlemen, thank you very much. Out of time. Appreciate you joining us with all of that perspective and that commentary. We'll leave you with some commentary from noted economist Jeffrey Sachs. My colleague Shireen spoke with him. He believes that Trump is single-handedly wrecking the global economy. And he's got some pretty strong advice for India. And as India looks to negotiate with the US under the Trump presidency. Listen in.
India really needs normal relations with China. And India should appreciate this is a great civilization, and this is a country that's going to play a huge role in the world in the 21st century. I mean, a huge role in the world on all sorts of things, on culture, on economy, on technology, on global peace. Yes, have good relations with the U.S., but don't be played by the U.S. Don't be anti-China because that makes the U.S. feel so good and speeds your agreement.
Welcome back. Let's actually get you some corporate opinion. This is a CNBC TV 18 exclusive. Peter Elbers, CEO of Indigo, says that he expects the airline to achieve double-digit growth by next year. Listen in.
If you look to the public DGCA data for the month of Jan and the month of Feb,
yes,
they actually look very, very positive and reconfirming that growth. So the underlying demand and the underlying dynamics are good. So we have been able to live up with our capacity guidance. I mean, if you take a ballpark number for aviation, and I would guess for hospitality, it's not dissimilar. GDP times 2 in a market which is underpenetrated. So if we take that 6 to 7% of GDP growth, which is taking place in India, you have a kind of figure where the growth is ended. For next year, we estimate, again, a early double-digit growth number going forward.
All right, that's Interglobe Aviation. Before we wrap, let's talk about some of the key events to watch out on Friday. Vamakshi is here with the latest. Vamakshi.
Well, Surbhi, tomorrow is a market holiday for us, but that will not stop some of the economic cues from trickling in. Lots lined up actually in tomorrow as well as day after. April 10th, keep an eye out on the US CPI as well as the initial jobless claims. China's PPI data will also be out tomorrow, so keep an eye out on that as well. Come April 11th, India will be disclosing the industrial production data. From the US, we expect to see the PPI data, while the UK will also be reporting its GDP numbers. The earnings season is now kickstarting. April 10th, that is tomorrow, we'll be keeping an eye out on numbers from TCS as well as as well as Anand Rathi, I beg your pardon. And apart from that, we'll keep an eye out on China's 34% additional tariffs, which will take effect on the US starting tomorrow onwards. On Friday, we'll also be keeping an eye out on the data that comes from AMFI on the mutual fund industry monthly data. So those were some of the important events that you need to keep an eye out for.
All right, Vamakshi, thank you very much for that. And with that, it's curtains on this edition of Markets Forward. More news and updates coming up right here on